Imagine waking up every morning, getting ready for work, commuting through traffic, spending 8 to 10 hours at your job, collecting your paycheck at the end of the month, and repeating the exact same routine for the next 40 years. Now, here's the uncomfortable question. If salary alone made people rich, why aren't doctors, engineers, lawyers, and corporate executives automatically billionaires? Think about it. Some of the highest paid professionals in the world earn hundreds of thousands, even millions of dollars every year. Yet when you look at the list of the world's wealthiest people, you rarely see anyone who became rich simply because of their salary. Instead, you see business owners, investors, entrepreneurs, and people who own valuable assets. So today we're going to answer one of the biggest myths about money. Why will your salary never make you truly rich? And more importantly, what actually does? Stay until the end, because the final lesson might completely change the way you think about earning money, the salary trap. Let's start with a simple example. Imagine two people. The first person earns $50,000 a year. The second person earns $500,000 a year. Most people immediately assume that the second person is rich. But here's the twist. The first person saves and invests 30% of their income every year. The second person spends almost everything they earn. Luxury cars, a huge house, private schools, designer clothes, expensive vacations. 5 years later, the first person owns appreciating investments. The second person owns expensive liabilities. Who is actually becoming wealthier? This is the first lesson. Income is not wealth. Income is money flowing in. Wealth is what you keep, and that's where most people get confused. Why most high earners stay broke. There's a famous saying, the higher the income, the higher the lifestyle. It's called lifestyle inflation. Every time people get a raise, they upgrade their car, move into a bigger house, buy more expensive clothes, eat at better restaurants, take luxury vacations. Soon, that raise disappears. They earn twice as much, but somehow save exactly the same amount, sometimes even less. That's why someone earning $80,000 may actually have a higher net worth than someone earning $300,000. Because wealth depends on ownership, not income. Time is your biggest limitation. Here's something nobody talks about. A salary depends on your time. If you don't work, you don't get paid. Think about that. There are only 24 hours in a day. Even if you're paid extremely well, your income has a ceiling. You cannot work 200 hours a day. Your earnings are limited by your time. Now compare that with a business owner. Imagine a software company. The founder creates a product once. Millions of people buy it. The founder earns money while sleeping. That's the difference between selling time and owning systems. Rich people don't just work harder. They build things that continue producing income without requiring every hour of their attention. The tax difference. Here's another uncomfortable truth. Employees are usually taxed before they spend. Business owners often deduct legitimate business expenses before calculating taxable profit, depending on local tax laws. That difference matters. Imagine earning $100,000. As an employee, taxes reduce your take-home pay before you decide how to spend it. As a business owner, eligible business costs may reduce taxable profit first. This isn't about avoiding taxes. It's about understanding how different income sources are treated. The wealthy spend time learning these rules. Most people never do. The real secret: assets versus liabilities. Here's the lesson that changed millions of lives. There are only two things you can buy: assets and liabilities. Assets put money into your pocket. Liabilities take money out. Examples of assets include investments, productive businesses, rental properties that generate positive cash flow, or intellectual property that earns royalties. Examples of liabilities include expensive cars, luxury items, and debts that require ongoing payments without producing income. The average person buys liabilities to look rich. The wealthy buy assets to become rich. And later, those assets pay for the lifestyle. That's a completely different strategy. The wealth snowball. Imagine investing $500 every month. It doesn't sound exciting, but after years of consistent investing and compounding returns, the results can become surprisingly large. The magic isn't the amount, it's consistency. Money starts earning money, then those earnings begin earning even more. Eventually, Your investments may generate more income than your salary. That's the turning point. Instead of working for money, your money starts working for you. The world's richest people don't live on salaries. Think about the biggest fortunes in history. They didn't come from paychecks. They came from ownership. Owning companies, owning shares, owning real estate, owning intellectual property, owning brands, owning valuable ideas. When the value of those assets grows, their wealth grows. Even while they sleep. That's why ownership changes everything. The dangerous illusion of job security. Many people believe one thing: my job is secure. History tells a different story. Entire industries have disappeared. Technology changes. Companies downsize. Economic recessions happen. Artificial intelligence is transforming many professions. None of this means jobs are worthless. Jobs are incredibly valuable. But relying on a single source of income carries risk. Diversification isn't just for investments, it's also for income. The rich think differently. Average people ask, how can I earn more? Wealthy people ask, how can I own more? That's a massive difference. Because ownership keeps paying. Salary usually stops when work stops. Ownership can continue creating value for years. The formula most schools never teach. Most schools teach you how to become a good employee. Very few teach you how to build wealth. Real wealth usually follows a simple cycle. Earn, save, invest, own, repeat. Not earn, spend, repeat. That tiny difference changes entire lives. What if you love your job? This is important. There's nothing wrong with earning a salary. A salary can be an incredible tool. It provides stability. It funds your investments. It pays for education. It gives you options. The mistake is believing the salary itself will make you wealthy. Instead, use your salary to buy assets. Every paycheck becomes a soldier working for your future. Eventually, those soldiers build an army. The millionaire next door. One of the biggest surprises in personal finance research is that many millionaires don't look rich. They often drive ordinary cars, live below their means, invest consistently, avoid unnecessary debt, and quietly build wealth over decades. Meanwhile, some people who appear wealthy are financing an expensive lifestyle. Appearances can be deceiving. Net worth matters more than image. The power of multiple income streams. Imagine having income from investments, dividends, rental properties, a small online business, royalties, digital products. None of these alone needs to replace your salary immediately, but together, they create resilience. One stream supports another. Over time, your dependence on a single paycheck decreases. The biggest mistake people make: many people wait for a higher salary before they start investing. I'll invest when I earn more. Years pass, the salary increases, so do the expenses. The investing never starts. The truth is that habits often matter more than income. Someone who invests consistently from modest earnings can build significant wealth over decades. Waiting usually costs more than starting small. Your salary is a tool, not the destination. Think of your salary as fuel. You wouldn't buy gasoline just to leave it sitting in the tank forever. You use it to reach a destination. Money works the same way. Your salary should help you acquire knowledge, skills, assets, investments, businesses, things that continue creating value long after you've earned the paycheck. Final thoughts. So, will your salary make you rich? Probably not. Can your salary help you become rich? Absolutely. The difference lies in what happens after payday. Do you spend it or do you invest it? Do you buy status or do you buy ownership? Do you work only for today's paycheck or do you build something that works for tomorrow? Because real wealth isn't measured by the size of your paycheck. It's measured by the freedom your assets provide, the ability to choose how you spend your time, the confidence that your future isn't dependent on a single employer, the opportunity to create a life built on financial security instead of financial stress. Your salary can open the first door, but ownership, disciplined investing, and patience are what take you through it. So the next time your paycheck arrives, ask yourself one simple question. Will this money disappear by the end of the month, or will part of it become an asset that keeps working for me? The answer to that question may determine not just your next month, but your next 30 years. If you found this video valuable, share it with someone who believes that earning more is the only path to becoming wealthy. And if you want more deep dives into investing, personal finance, and building long-term wealth, subscribe and join us for the next video.